Hi guys, how you doing? Hope you're well. Just a very quick update on the markets because I want to show you a very interesting video just in a few moments. This is quite a very fascinating video I want to share with you in a few moments. Before I do that though, let me just say this. As you probably know by now, I've been saying for many weeks now that this rally we've seen in the stock markets, that I think this rally is most likely a fake out rally, that it's not actually going to be what everyone thinks it is. Most people have already assumed that the bull market is back on. But actually, I've been warning now for many weeks, as you probably know by now, from the videos I posted. For example, back some weeks ago, you may remember this particular video over here, where I said the market that knows all is warning us. Okay, now what is the market that knows all? I'll share that with you in just a few moments. Then, of course, in a few weeks later, I talked about the kiss of death sell signal and the fact that greed has taken control of the markets and in fact blindsided a lot of people in the markets. Now, as you may remember, in the first video that I posted about this, the market that knows all is warning us, I talked about the bond market and I said, look, the bond market has remained strong and resilient. Why is that important? Because when the bond market is remaining strong, and while at the same time, while the stock market was remaining strong, something is not quite right. The fact that the bonds were rallying higher meant that there's a sign of uncertainty and volatility. And as you can see here from this chart, take a look at this. This is the bond market. And notice how it has continued to remain resilient. And in fact, just in the last few weeks, it has rallied higher. Now, I mentioned this many times back, and I said the fact that the bond market continues to remain strong is a sign that institutional investors and traders, okay, the institutions, are worried and very likely they expect further uncertainty ahead. The reason is, and the reason why we call the bond market the market that knows all, is because bonds are usually traded by institutions, by the smart money, not by your average Joe, not by your average person in the street. The stock market is the market that is traded by just about everybody. So the market that is traded by just about everybody is the stock market. It's not the bond market. Bonds, again, are usually traded by institutions, by professional investors and traders. So it's important that we keep an eye on this market. And you might recall from another video I posted recently, I said, look, the dumb money is getting overconfident, as you can see here. The dumb money has become extremely overconfident and something is not quite right with the market. All right, guys, so let me go ahead and play this clip you see here. Let me just say at the beginning that I don't watch CNBC, but this particular clip that I came across, I find it quite fascinating because essentially they confirm what we've been saying now for some weeks. Listen to it right now.
So I brought this up because this was exactly my thesis on why we were due for a pause. Doesn't mean we won't still have one, but the thesis was the stock market had not priced in the weak economy yet. But what's happened is the bond market's priced it in. The bond market's telling you the chances of a rate cut by December, this is for the December meeting, are actually 30%, up from 2% at the beginning of the month. So there's been a massive repricing in the bond market. The stock market went the other way and said, hey, wait a second, if we got lower for longer, the playbook has been buy stocks. And so to me, this is what I started at. To me, I got to say, there's something not right with the stock market in my thesis.
All right. So, Grasso, how do you view this chart? Because this is telling me that it's bad for the market.
It's bad for the market.
All right, guys, so it's very interesting. What the guy in this video is saying is actually absolutely correct. The bond market is pricing in something, but the stock market has failed to do so. So in other words, what the bond market is doing here is taking into account some important factors that the stock market has not yet taken into account. And actually, it's not surprising why it has not done so, because again, it's the bond market that is traded by institutions, by professionals, not the stock market. So the bottom line is this. I believe that the bond market is, in other words, this market you see here, I believe the bond market is taking a good look at the stock market right now. And essentially what the bond market is saying to the stock market is pretty much summarized by Doug Heffernan from the sitcom. You might have seen the sitcom called King of Queens. Let me play it for you. This is essentially what the bond market is saying to the stock market. Exactly. That's the only way to say it. All right, guys. So bottom line is be patient, because I think that eventually this market is going to unravel and pretty much fall in line with what the bond market is warning us. Something is not quite right in the market. Something is not quite correct with what's happening in this rally. And very soon, I think in the next few weeks, we could find out exactly what that is. And again, it's a bearish signal for the stock market. All right, guys, before I finish the video, let me just say that we've covered a lot more detail in the members video about the stock markets, currencies, and also the crypto markets as well. Thanks a lot. Bye for now.